Okay, so let's talk about what is impacting crypto right here, this moment. Crypto is dropped a little bit down pretty significantly. We got Bitcoin dropping almost 5+% on its way to 19,000. Ethereum dropping as well. We're going to talk about those levels and we're going to talk about the exact thing that's going on right now. If you ever did so, hit that subscribe button below. Please drop a like on this video. Tell the algorithm that we are here because I have one goal is to help you navigate crypto better, make more money, just be more prepared with information. Here's what's going on right this second. Crypto is down 3.4%, and we're now well below that 1 trillion market capitalization. And as I said, you can see right here, Bitcoin down 4.8 to 20,009. Ethereum down 3.3 to 1,500. And we can see right now, Bitcoin is pretty much at its close to its 24-hour low. I expect it to continue to drop more in the short term. Here is what is going on. So if we take a look at Yahoo Finance, yes, I know that we're going to talk about stocks here for just a minute. So bear with me because this does have an impact on crypto. Okay. So you can see, look, as of the recording of this video, the Dow 30 is down 274, the Nasdaq's down 145, basically aggregate about a percentage down overall. So stocks are sinking as basically we're waiting. We've got this ahead, this crucial, February jobs report. Okay. So what this comes down to is that one of the key components of inflation and the government's battling of that and trying to make inflation go away and all that is jobs. So trying to slow down basically, the job scenario. Okay. And this is what is basically pushing things down right here. It's this, right? It's this. So the weekly report on initial filings for unemployment insurance Thursday morning showed 211,000 claims were filed last week, an increase of 21,000 from the prior week, and what economists at Oxford called the first, quote, the first hint of weakness. So this is the beginning of the jobs report. We have the CPI, the Consumer Price Index report, coming in approximately 6 days on March 14. No, 5 days. Don't do math in public. You get my point. All right. Yeah, that's not good. Okay, I can't do basic math. I just can't. All right, I'm getting, you got to laugh at yourself, right? So the jump in jobless claims to 200K last week from 190K is the first sign of weakness in claims data this year. Still well short of the 300,000K level that would be consistent with a recession. Okay, so the R word is rearing its head again, recession, right? So we're now starting to see blood in the proverbial water, if you will. People are starting to get afraid again, and this is consistent with this data that is coming out. Okay, so what does all this mean? This is something that I've been talking about now for a week plus, more so on all my videos. Okay, is the fact that we had a bad February jobs report. Jobs, growth grew way higher than expected. We had a hotter than expected CPI report in February. We had a PCE report, which is another inflation indicator report. All of these reports basically added up to the fact that we're going to have to continue to aggressively raise interest rate hikes. Okay, so now we fast forward to March to now. Now we're getting some hint that the jobless insurance claims are rising, et cetera. But we also know that jobs are continuing to not be in line with the expectation for the reduction of inflation, all that kind of stuff. Oh, by the way, we got a CPI report coming on March 14. That's going to be hotter than expected. We pretty much know that it will. It's going to show that hey, inflation's not going away as fast as we would want it to, et cetera. And now we have March 21 and 22, which is when the FOMC, the Federal Reserve, is going to meet. Oh, add into that, Chairman Powell 2 days ago has given a couple of different speeches, one to Congress, et cetera, stating that there's going to be, quote, much higher aggressive interest rate hikes coming per the data that we're getting, et cetera, et cetera, et cetera. That all aggregate adds up to the fact that people are scared and you have people exiting the proverbial building and taking their money with them, right? You've got this number continuing to go down. People are rolling to basically people are rolling into a cash position. In fact, one of the indicators I like to look at is over at wellstats.com. And I haven't refreshed this in a while. So let me show you this. Before I hadn't refreshed this, which showed that the top 100 Ethereum wallets were holding 789 USDC and 706 USDT. They were in a pretty big cash position. Let's see by refreshing this. By the way, I don't even know what I'm about to see. I'm going to see what we're going to find out. So this shows that So I guess it refreshed itself. Okay, so I guess this in the background does refresh itself. There you go. My apologies. So basically, this does show that whales, the top 100 Ethereum wallets, are holding a huge amount of stablecoin. What does that mean? Risk minimization, right? They're in a basically cash position, waiting to pounce when they feel that the prices are low enough. My point to you is that's what the smart money is doing, is they basically have taken a lot of risk out of their portfolio by selling off and moving into predominantly cash positions. Okay. So that's what's impacting crypto right now. That's kind of some insight into what the top 100 Ethereum wallets are doing. Wellstats.com, free to use. Go check it out. That's what I got for you. As always, I'm just trying to help you navigate some crypto stiff. All right. I'll see you. Have a good one. Go make some money. Opportunities are about to be here to buy things on